Africa's largest refinery had to buy crude from the UAE because Nigeria's own oil system cannot keep it fully fed. And yet, this week, 50 million Africans gained electricity access, with Nigeria leading the charge. One of the most significant things is that we know that the IMF warned Nigeria against this, told them it's risky and they should not do it. However, Nigeria as a country, as a people, I think we mirror the kind of country that we have, in sense that we have a strong head. They will still go ahead.
A strong-headed nation.
They will still go ahead and do what they want to do. But anyway, Fitch Ratings simultaneously published a report warning that the TRS structures can obscure sovereign debt risk and complicate any future debt restructuring. So, I mean, we know that our current structure, our current debt stands at, like Nigeria's current total public debt stands at $110.3 billion. So we've literally just added, as of December 2025, right? I'm reading from last year's statistic. And then businesses with dollar denominated costs or revenues should have very strong FX contingency plans. The World Bank Group and the African Development Bank jointly announced on June 16th, 2026, that Mission 300, their joint initiative to connect 300 million Africans to electricity by 2030, has hit the first major milestone.
But solving Nigeria's power problem will be a challenge and would also require, major improvements in transmission, distribution, and of course the grid reliability. So all of these, a lot of things have to actually be put in place for it to actually be resolved in terms of our electricity in Nigeria here. So if they could actually put in the work properly, I feel like it should solve the problem. Welcome back to another episode of Across Markets by Business 360. I am your host, Vera Ifochukwu, and of course, I have here with me.
I'm Joy Abia, the co-host on this space. Thank you so much for joining us on another episode of Across Markets. So, we're going to begin. Nigeria has just done something that has had the IMF and the Fitch Ratings clearing their throats at the same time. The government went ahead with a $5 billion borrowing deal that both institutions warned was opaque, complex, and loaded with lots of risks. Meanwhile, Africa's largest refinery had to buy crude from the UAE because Nigeria's own oil system cannot keep it fully fed. And yet this week, 50 million Africans gained electricity access, with Nigeria leading the charge. This is Across Markets. Let us break it down. Okay. Hi, Vera.
Hi, Joy.
How are you doing this week?
I'm doing great.
Okay, so let's break down Nigeria's $5 billion total return swap. Now, Nigeria's, they have just they moved to execute a $5 billion total return swap, which is a TRS. Now, they made this arrangement with the First Abu Dhabi Bank, that's FAB, which is like the UAE's largest lender, right? So basically, the structure, whatever this total return swap structure is going to basically allow Nigeria to receive hard-earned currency liquidity, that's like dollar liquidity, by pledging naira-dominated government bonds as collateral. So it's doing this at a collateralization ratio of 133%. Meanwhile, 6.67 billion naira in local bonds secure $5 billion in external financing. One of the most significant things is that we know that the IMF warned Nigeria against this, told them it's risky and they should not do it. However, Nigeria as a country, as a people, I think we mirror the kind of country that we have, in sense that we have a strong head. They will still go ahead.
A strong-headed nation.
They will still go ahead and do what they want to do. But anyway, so the IMF's resident representative, Christian Ebeke, publicly stated that our view is that transactions in these types of structures carry risks usually they are opaque. So the terms are not always very transparent when we review these instruments across countries. So the IMF basically said, we're not sure of this transaction, you should not take it, because definitely behind it carries a lot of risk. And I haven't seen any reports where Nigeria has taken this sort of risk before. So it doesn't still state here that this is the first time. However, considering the goals that this current administration has or has had since they came in, right? Considering that they've put in some things in place and some of the reforms that they've already started making that has sort of shifted the economy in a certain sense. Now they're saying, like, the IMF has warned, and Fitch Ratings too, that this move is potentially, like, it's very risky especially to all of the reforms that they have managed to build over, like, the past, call it 3-4 years in this administration specifically. Okay, so Fitch Ratings simultaneously published a report warning that the TRS structures can obscure sovereign debt risk and complicate any future debt restructuring. So, we know that our current debt stands at, like, Nigeria's current total public debt stands at $110.3 billion. So we've literally just added, as of December 2025, right? I'm reading from last year's statistic, and then now adding $5 billion to it, which is the total return swap, which is sort of like sophisticated form of debt. Okay, so Fitch Ratings also highlighted the fact that Angola in 2024 took the same total return swap with they made the same deal with JP Morgan, and it's the falling oil prices triggered a $200 million margin call in April 2025. So that forced Angola to draw from reserves at the worst possible moment. So look at what happened for Angola, when they tried this move with JP Morgan. So they are saying, like, this, they're not trying to, basically Fitch is trying to give us a picture of how risky this could be. And where would Nigeria see, like, if, let's just say, things don't go as expected, okay, with how they plan to spend this money? What happens? Where are they going to draw money from to pay back the UAE, like the bank in the UAE, right? The First Abu Dhabi Bank. Where? So these are the things that are we're drawing attention to as we open the show on today's do you have something you want to say?
No, just finish.
Okay. All right. Nigeria is really just following suit on other African countries at the moment, because we've seen Angola, I just mentioned, and Senegal has actually used these TRS structures before, and it's not sort of been we've not actually had any good news in terms of how they've had to repay. In one way or the other, it's actually been sort of like draining for most of those African countries that take it, because are they at the stage where they can, like, what is it just everything just boils down to how they're using that money, right, at the end of the day. And knowing that our elections are close, 2027 elections are close, how, like, are we going to get, we don't have a track record of transparency, so are we really going to get all of that with this news and the news of this, TRS, this debt structuring?
All right, I also feel like, you see, it's not necessarily all about the borrowing, right? I feel like it's also about how Nigeria borrow. Do you understand? Because if the naira weakens or a local bond value falls, Nigeria may have to provide additional collateral or even make extra payments at the end of the day. So I feel like that's like a chipping.
Okay, so to shed more light onto what a total return swap is, it is not debt in the conventional sense, right? It does not exactly appear in the sheets as external borrowing, right? But it also has all of the economic characters of what comes under taking irregular debt, right? Which is the payment, the collateral requirements. The maturity date for this particular one is 2032. All right. So basically, for businesses, what this would mean for businesses is that we would need to monitor naira stability the naira stability very closely, because knowing that our collateral is going to be we're going to be paying in naira dominated, bond assets. They're literally going to be drawing from our internal reserves to make payments, and that's not going to do enough. That's not going to do good for especially for our exchange rate, and then for internal economy stability, right? So any significant FX depreciation or interest rate spike could produce a margin call. So that, I think, is also going to put this obviously is going to put the CBN on their toes to how to check through with interest rates, and then whatever the FX is going to be saying. So I just hope that all of the things that the central bank has done so far this year would support Nigeria's move in taking this loan, or taking this total return swap, right? Businesses with dollar denominated costs or revenues should have very strong FX contingency plans, because every anything that, if you're holding anything in naira, like a bond or something, is possibly going to be devalued, knowing that this is like a collateral at this moment. So we also have SMEs who are unlikely to be directly affected in the short term, though. They might not be affected right now, but if there's a margin call scenario, reserves would definitely draw down, and there may not be much liquidity for SMEs who would need money to keep running their businesses, loans and all of the likes. And then for investors, this is definitely going to raise a red flag, because they will just it's going to really, I think, push attention from everything that has to do, any naira denominated asset basically is going to be affected. So investors are definitely going to put an eye on that, and possibly not go for bonds at this time. And so for consumers, if this is managed well, right, Nigerians may see infrastructure investment. So basically, if they're taking this money and then they are investing it within the economy, then that's what we can look out for, is that yes, our infrastructure is going to do better. But if not, it's going to have a ripple effect in the fact that the naira is going to get weak, and then our reserves obviously will be depleted. And then under policymakers, IMF's concern about this is very, very relevant. It's the IMF that has just recently improved, they've been giving a lot of recommendations to the Nigerian government on how to spend some certain money and where to push some of their assets or push some of their investments into. So yeah, IMF is definitely concerned, and that calls for something to pay attention to, but we didn't exactly do that. So anyway, from the question of how Nigeria finances its ambition, let's look at how Nigeria's biggest industrial asset is actually running. So we're moving now to the sector signal.
All right. So for the sector signal, we're moving on to Dangote Refinery and Nigeria's crude supply, paradox. So Nigeria is Africa's largest crude oil producer, and regularly producing about between 1.3 and 1.7 million barrels per day. Looking at this, Nigeria should be, self-sufficient in refined petroleum products and a major regional supply because of, the Dangote Refinery that we have. And with the current performance, the refineries Naira for crude agreement with NNPC guarantees 13 to 15 crude cargoes per month. And as of mid-2026, the NNPC have been delivering between 5 and 10 cargoes, which consistently below the contract volume, right? And the refinery has compensated by sourcing internationally, that is 70% from Nigeria in 2025, with the remaining 30% from the US. And in 2026, it has expanded to Angola, Ghana, Libya, and of and of course Guyana. We can see here that the Dangote Refinery is operating at full capacity, but Nigeria cannot, consistently provide enough crude oil. And this is as a result of, Dangote now import crude oil from US, Angola, Ghana, Libya, and Guyana, and now the UAE, right? So Nigeria produces crude oil, right? And Nigeria owns Africa's largest refinery, but Nigeria still imports crude. That highlights the serious weaknesses in the domestic crude oil supply chain. The core problem isn't actually about refining. The issue is upstream supply. That is the supply chain. International oil companies often prefer exporting crude internationally because payments are usually in dollars. Contracts are simpler and international pricing is more attractive.
Dangote, the refinery is a business itself. So this is just a classic example of a businessman who will be diversifying all of his options in terms of the supply, who supplies the products that he sells. He's definitely going to diversify. I mean, Nigeria is sitting on oil, yet we are still, the biggest refinery would still look outside to have, for the sake of having, enough sourcing options. So this is not a shock. I would not even say that this is a shock to, this should not be a shock. Honestly, it's just a business's power move, right? Some of the risks that may occur from this is the FX exposure to the non-naira crude purchases. NNPC supply reliability remains uncertain, and then geopolitical risks on the Strait of Hormuz routing, right? So, and then we have on the opportunity side that the IPO potential in 2020 could really attract significant investor interest. We could have like the UAE crude adds blending flexibility for heavier grades. Well, like I said, a business would always have their multiple options, and I think that Dangote Refinery has made a good choice in doing this, because you cannot depend on one source always. At the end of the day, we're trying to build a strong industry that is from within Africa, from Nigeria to the rest of the world. So whatever steps are needed to take that, I think that, it is necessary that it is made.
Also from this, we might ask if petrol would become cheaper, right? So potentially, the pricing in petrol will depend in terms of it being cheaper or in terms of it being either more expensive or cheaper would depend on, crude prices, right? It would depend on the exchange rates, obviously, taxes, transportation costs, and of course, competition amongst every other African nations.
Okay. I mean, the 1.4 million barrels per day target, by 2028 is extraordinary for the Dangote Refinery. So basically at that level, Dangote could possibly be processing or would possibly be processing up to 80% of Nigeria's current crude production in a single day. So the domestic crude supply question becomes existential at that scale. So yeah, kudos again to the Dangote Refinery for taking good steps to, making the industry a stronger industry and providing for a nation. All right, so onto the feature spotlight for today is the Mission 300, Africa's electrification revolution. So the World Bank Group and the African Development Bank jointly announced on June 16th, 2026, that the Mission 300, their joint initiative to connect 300 million Africans to electricity by 2030, has hit the first major milestone. 50 million people connected in less than 3 years across 40 countries. Nigeria, Tanzania, and Ethiopia are the three lead beneficiaries. The timing is significant. It follows the Dangote energy discussion perfectly because electricity access is the prerequisite for almost everything else that the show has discussed today. All right. So 50 million people have gained access since between July 2033 to now. That's April 2026. 50 million plus people within Africa have gained access to electricity. And we have also, from the World Bank, 4.5 million Nigerians newly connected basically within Nigeria. And that is led by the private sector. Anyway, the World Bank and the African Development Bank they commit $15 billion to electricity financing. However, we still have 87.2 million Nigerians that stay without electricity, which is the world's largest deficit. 50 million people, that's good numbers. However, we still have a very much number. So that there's still a huge gap between the people who have electricity and who don't have. How then do we bridge that gap? And does it mean that more people getting access to electricity, and then even though it is funded by other organizations, does that mean that is electricity going to get more expensive? And is that cost going to be the reason why the rest of the people have not gotten just yet, or will not get, or will get at a slower pace? These are questions to ask, because electricity is really one of the most important things. Just the other day, I was sitting down with my brother, and it's like he was saying a simple thing like electricity, because the average man, let's just call it the average Nigerian individual, has to hustle for the basics before they even start thinking before they have to think about the other things. And I mean, I get it, because let's say you're earning you're going out and you're earning some money, and then you're just thinking of the basics like food, and then electricity. Electricity could be something that the government should do with ease and as subsidized as possible for us. But yes, we're looking forward to everything that they're doing. We are seeing the numbers at 50, but then we still have 87 people. And so let's just say that that's the World Bank's number. What if does it actually capture?
There's a possibility that it could even be more. So
exactly. So anyway, I mean, it's Nigeria's private sector led. Basically, those that have access to electricity right now is due to the fact that the private sector led the provision of the electricity. So we're seeing that they are producing more results than maybe if they are still public institutions responsible for providing electricity.
And also, will this mission 300 actually solve Nigeria's electricity problem? Well, we can't say completely. Well, what do you have to say?
We're looking out.
Okay, we're looking out. But I think that it will help, especially in, through mini grids and, off-grid solar. But solving Nigeria's power problem will be a challenge, and would also require, major improvements in transmission, distribution, and of course the grid reliability. So all of these, a lot of things have to actually be put in place for it to actually be resolved in terms of our electricity in Nigeria here. So if they could actually put in the work properly, I feel like it should solve the problem.
All right. Anyway, so we will just be jumping onto the watch list, what you should be watching out for this week. So we have 3 major developments that you should monitor. So the first thing is the IMF and Africa. Can the debt cycle finally break? So the first thing on our watch list is the IMF and Africa. Can the debt cycle really break? Okay. The IMF's newly appointed Africa Department Director reveals a more nuanced IMF position than the Nigeria TRS story that I had read earlier. Zidane acknowledged that many African countries have actually broken the cycle, while noting that repeated shocks since 2000, COVID, conflict, rate hikes have reset debt. So it matters because this is a new director, of course. It's signaling a potentially more collaborative IMF approach to African debt. So his language on shared responsibility and cheap financing is a shift from the fund's traditional emphasis on domestic adjustment. So all sectors in countries with active IMF programs like Ghana, Zambia, Kenya, Ethiopia, and Egypt, so these are the countries that are active within the IMF programs in this debt. Now, so basically what we need to watch out for is Zidane's first major policy statement on African debt restructuring frameworks. So this is expected to be completed within Q3 2026. So we'll be watching out for what policies that he's going to implement, the policies that he's going to suggest to the IMF on behalf of the Africa of this region, the African region that he's representing, and how definitely would we break the cycle for sure through his own recommendations. We'll be watching out for that.
Also, we'll be watching out for Nigeria's youth policy mismatch that is a slow burning crisis. So business day analysis argues that Nigeria's youth development infrastructure, that is education, labor policy, training programs, was designed for a wage employment economy. But the actual Nigerian economy is driven by entrepreneurs, freelancers, digital workers, and of course, micro businesses. Now, the MSMEs contribute close to 50% of GDP and over 80% of employment. Now, the policy architecture hasn't caught up yet. Programs are evaluated on numbers of beneficiaries traded, not substantially business created. Now, why does this actually matter? Because with over 60% of Nigerian population under 25 and 3 to 4 million new labor market entrants annually. Now, a policy mismatch at this scale is not a problem. It's a structural drag on long-term growth, right? And the industries that will be affected are, the education industry, digital economy, the fintech, MSME, finance, and workforce development. So what we actually watch out for is the 2026 National Youth Policy Review and whether SMEDAN's mandate is expanded to reflect the gap between policy design and economic reality. So watch out for that too.
And the last thing to watch out for would be Dangote Refinery IPO, of course. We are asking the $19 billion question. Aliko Dangote has confirmed his plans to list the Dangote Petroleum Refinery on the Nigerian Stock Exchange in 2026, as we had earlier touched on at some point in the show, potentially offering up to 10% of the company. The refinery's $19+ billion capital base, full nameplate capacity since February 2026, growing export revenues, and now a diversified international crude supply network. Make this potentially one of the most significant African IPOs in a generation. Basically, it matters because we already know Dangote Refinery is successful, and it will definitely be one of the largest listings the largest listing as of 2026 on the Nigerian Stock Exchange. It will be bigger, it will surpass the last one, which was MTN's some years ago. And of course, the capital markets, the energy sector, the downstream petroleum sector, the industry, and the institutional investment industry sector. These are the sectors that will be affected by this move. And so we are just going to be watching out for the former IPO filing timeline. Market speculation suggests that it's by the second half of 2026 that remains the target window. So we're watching out for SEC Nigeria filings and a Dangote Group press conference. That said, thank you so much for joining us on this episode of Across Markets. If you found any of these insightful and helpful, please leave a comment and do not fail to ask any questions or even bring up any topics or any debates on any of the things that we have raised here on this episode. Do not forget to like, share, and subscribe to our channel, Business 360 TV, and follow us on all our social media platforms. This is Business 360 on Instagram, Facebook, TikTok, and X. All right. Again, my name is Joy Abia. Thank you so much for joining us.
And I'm very faithful. Thanks for joining us.
All right. Till the next episode.
Bye.